Hey everyone, Scott here from Exodus Capital. Today we're diving into one of the biggest questions in investing. Real estate versus stock market. Which builds wealth faster? Stick with me till the end because I'm going to break this down in a way that's super easy to understand. I'll give you access to a free wealth building checklist to start investing today. Alright, let's get into it. Real estate makes money through rental income and appreciation. Rental income is from tenants paying to live in your property. Appreciation is the increase in property value over time. Stocks offer dividends and capital gains. Dividends are regular payments to shareholders. Capital gains are profits from selling stocks. Both have pros and cons for building wealth. Let's discuss the initial capital needed. Real estate requires a significant upfront investment. You need money for a down payment and closing costs. Stocks are more accessible. Start with a few dollars using fractional shares. If you're serious about real estate investing, we've put together an expert-led course at Exodus Capital. It's designed to help you get into cash-flowing real estate faster. Check it out at your website link and start building your empire today. Let's dive into the risks of real estate and stock investing. Real estate is stable but has risks like maintenance and taxes. Stocks are volatile but offer higher returns. Weigh these risks carefully when investing. Let's compare real estate and stocks for wealth building. Real estate offers steady, long-term growth. Rental income boosts earnings. Stocks can grow faster with high-performing companies. Stocks offer higher returns but greater risk. Each has its own pace and potential. So, what's the winning strategy here? It's all about balance. Diversify with real estate and stocks. Maximize wealth-building potential. Real estate offers stability. Stocks provide growth. Combine both for a resilient portfolio. Diversification is key to managing risk. Ready to invest in the stock market? Our stock investing course teaches you to pick winning stocks and build wealth. Perfect for beginners or those improving their strategy. Grow your money the right way. Visit our website link to start today. Now, let's talk about one of the most compelling advantages of real estate investments: tax benefits. Real estate offers a variety of tax incentives that can significantly impact your returns. You can deduct expenses related to managing and maintaining your property. These deductions can reduce your taxable income. The IRS also allows you to depreciate the value of your rental property over 27.5 years. This means you can deduct a portion of the property's cost every year. Some real estate investments also qualify for special tax credits. By leveraging these tax benefits, real estate investors can maximize their returns and build wealth more efficiently. If you're serious about real estate investing, understanding these tax advantages is crucial. Now let's dive into the tax implications of stock market investments. When you invest in stocks, there are a few key taxes to consider. First, there's the capital gains tax. When you sell a stock for a profit, you pay capital gains tax on the difference between the purchase price and the selling price. This tax can be short-term or long-term, depending on how long you've held the stock. Next, we have the dividend tax. Dividends are generally taxed as ordinary income, though qualified dividends may be taxed at a lower rate. Over the past few decades, both real estate and stock market investments have shown impressive growth, but they have distinct patterns and characteristics. Let's dive into the historical performance of these asset classes. Historically, the stock market has delivered an average annual return of around 7 to 10% after inflation. This includes rapid growth and downturns like the dot-com bubble and the 2008 financial crisis. Despite fluctuations, the long-term trend is upward, driven by corporate profits and innovation. Now let's turn to real estate. Real estate has also been solid, with average annual returns of around 8 to 12%. Real estate values are less volatile but can experience downturns, like the 2008 housing crisis. A key advantage of real estate is passive income through rentals, providing steady cash flow. Diversifying across both asset classes can balance risk and reward, creating a resilient portfolio. Diversification is a cornerstone of a robust investment strategy. By spreading investments across different asset classes like real estate and stocks, you reduce risk and enhance returns. Imagine a portfolio solely of stocks. A market downturn could hit hard. Now consider a diversified portfolio with stocks and real estate. When stocks are down, real estate might be stable, balancing losses. Diversification reduces risk and can enhance returns. A mix of assets performs differently under various market conditions, achieving consistent growth. Diversify to build a stronger, balanced financial future. Investing in the stock market can offer high returns, especially with growth stocks. It's also more liquid compared to real estate, but the stock market is volatile and prices can fluctuate dramatically. Combining these opinions, both investment types have unique advantages and challenges. Diversify your portfolio to include both real estate and stocks. This strategy leverages the stability of real estate and the growth prospects of the stock market. As we conclude our deep dive into real estate versus stock market investments, let's summarize the key points. Real estate generates income through rental properties, while stocks offer high returns through capital gains and dividends. Both have unique risks and rewards. Real estate often demands a significant upfront cost, whereas stocks can be purchased with smaller amounts. Real estate is more stable but less liquid, while stocks are more volatile but can be quickly sold. Diversification is key. Combining real estate and stocks can create a balanced portfolio. Which investment is better for you? It depends on your financial goals and risk tolerance. If you found this video helpful, hit that like button, subscribe, and turn on the notification bell for more tips. Drop a comment below, real estate or stock investing. I'd love to hear your thoughts. See you in the next video. Keep building your wealth.